Okay, good afternoon, everyone, and welcome to the 8th Annual Laurentian Bank Securities Institutional Investor Conference. My name is Nick Agostino, Head of Research and the Diversified Technology Analyst here at Laurentian Bank. Also assisting me today is my associate, Salman Rana, who will be running the background as far as the moderating this panel discussion. Before we begin, just one housekeeping item. Just please ensure your microphone is on mute and your camera is turned off during the presentation. And also please ensure your name appears on screen so we can properly address any questions you may have. I will pause during the course of this chat to take any questions. So either feel free to use the chat button or the raise your hand feature, and I will call on you to take your question. And also remember to lower your hand once your question has been asked. And if you experience any technical issues during this conversation, please communicate this on the chat and we'll try to get to it. Finally, we've also prepared a guide, or a set of slides that will help you guide you through today's discussion. And these can be accessed through the bottom right corner of your screen under a tab that says HC for a healthcare panel. And with that, we'll get started. So join us today for the fireside chat is from CloudMD. We've got Essam Hamza, the CEO. From Dialogue Health, we've got Cherif, Habib, CEO as well. And from Well Health Technologies, we've got Shahbazi, Chairman and CEO. So without further ado, we will jump into it. So first question from an industry perspective. Obviously, now that we are dealing with COVID, we've seen telehealth go from a 0%, to use that number, to 30% in terms of adoption. And I just want to get your perspectives because we've seen varying opinions as to how this thing shakes out as we come out of the pandemic. So give me your opinion, your observations, and why you think this thing has some good stickiness. And we'll start with Hamed.
Yeah, thanks, Nick. It's great to be here. I think it's a really interesting question. I mean, there's a lot of data out there. I think we saw it go from much farther than 30%, obviously during peak pandemic. I mean, I think at peak, maybe it was closer to 70 or 80%. And it's hard to tell where exactly it is now. Our view is that it's probably higher than 30%. I can tell you that we're now majority telehealth in terms of our omni-channel patient services delivery. And I think most primary care is right now, just because of the availability of codes and the availability and the relaxation of those of telehealth, of the scope of what's included in telehealth, including phone calls and things of that nature. So not just virtual care platforms and whatnot. And our belief is that after consulting with a lot of different thought leaders I would say not only in domestically here in the country, but also the world, through the global consulting firms, is that the sort of the world will sort of, in terms of the industrialized countries and the 40 countries that have modern medical systems, is that the thinking is that it will land in around 50-50 overall, with some countries a bit higher and a bit lower. We believe, again, this is an informed view in terms of collecting intelligence from a bunch of folks, that Canada will land a bit lower than that, but then we'll start to creep back up as more scenarios and more and technology improves in terms of being able to capture clinical data through telehealth platforms. And we're starting to see a lot of advancement in that area. So very bullish. I think it's definitely an entrenched behavior now, not just with the patient, but also with the physicians. I think patients were always ready for this. I think it was the practitioners that sort of held it back. That's our own view that I know is shared by many. And I think what really happened during the pandemic is that, it got practitioners to take those very challenging change management steps that are so difficult with a sector like healthcare. And what we see now, even with our own doctors, we have hundreds of practitioners in the well system, and we see that they like it. I mean, a lot of them want to do just telehealth, or some want to do 80% telehealth, some want to do 50% telehealth. And so there's a spectrum there. And we see that that's going to be an entrenched pattern with the practitioners as well. And of course, I mean, patients love the convenience. Patients don't want to spend 2, 3, 4 hours out of their day to come in and spend and just for a 5-minute, prescription renewal or chronic disease check-in. So I think there's just a lot. It's a major silver lining in my view from COVID, that these conveniences are now there, and I think they are helping improve patient outcomes because they're improving access to care in a more timely way. But yeah, that's sort of my thinking.
Okay, and then Sharif, you want to weigh in your thoughts and observations?
Yeah, I mean, I totally agree with what Hamid says. Our belief is that the pandemic has accelerated a trend that was already happening. It just shortened that time cycle. It didn't change it. And I think, I think, people now have tried it. They're not going to go back. It's like any innovation that we can think of. Once you're kind of in that on that innovation life cycle, you're not going back. So that's how we see it.
Okay, and Essam, thoughts?
Yeah, totally agree with everything that's been said so far. I think the important part is something that I think started to see, and I think will be entrenched over time as governments realize the importance of this. Will be more triaging virtually first. So even if you do need to be seen in person, they're going to require some sort of virtual triaging, whether it's telephone, telemedicine, or whatever. They don't want people showing up in offices anymore. And when we talk about post-pandemic, we're not talking the next month or 3 months or probably 3 years or whatever. It is a series of changes that you're going to see, and people don't want them to sit in the waiting room anymore if they weren't invited to be there. The second part I think that's important is that this is shifting to a consumer request now. And so you're going to see a shift in the way doctors provide this. If they don't provide this, they resist this and go back to the old ways. You're seeing a difference in the way doctors are able to handle larger practices now. And so the shortage of doctors before and the leverage they had is not the same as it was. And you're going to see patients demand this kind of thing, online booking and telemedicine, and they will go to doctors and clinics that provide those digital services 100%, and group practices and so on. So.
Okay, so the second question is around organic growth. Obviously, Dialogue, you've done 4 transactions, I believe, before going public. Obviously, CloudMD and Well, including today, you both have announcements in the marketplace. So congrats on that. Just maybe on the organic growth side, talk to me about how important is that in your current growth as far as where you are today, where you guys are putting most of your focus, efforts, and investment dollars, and respectively highlight what kind of organic growth you guys are targeting in the short term and that you're generating across your entire portfolio. And we'll start again with Hamid.
Well, I think organic growth is always incredibly important. I mean, even if you're a corp dev or M&A driven growth engine, on a whole, without organic growth, you're a melting ice cube. I think it's been remarkably important to us. I mean, without the kind of organic growth that we've seen, we would have not turned the corner on profitability as quickly as we did. We were a bit ahead of plan on that, and that came from our organic growth. There's no doubt about that. The expectations of organic growth are obviously going to be different in terms of different types of assets in our portfolio. As you know, we have a number of different business units, ranging from patient services to platform technologies and even data protection, and obviously the digital technology, tech-enabled services and platform technologies are growing faster than some of the patient services. But we're really proud and pleased with the fact that we've been able to catalyze organic growth in our clinical group, and that's been a really important part of the profitability improvements that we've made. So I think it's incredibly important. This is one of the big parts of our discipline in M&A is sourcing assets that we feel not just provide us with an accretive opportunity to improve the economics of the company, but also something that's sustainable not only in terms of the cash flow growth of the company, but also how that growth will come in terms of the management structure that will continue to execute on that growth. So it's a big part of our thinking, because obviously so much energy and planning goes into M&A for us, and organic growth is probably one of the biggest considerations.
Okay. And Cherif, where are you guys on the short-term, long-term on organic growth, and for that matter, M&A?
Yeah, a lot of similar themes that what Hamid said. Obviously, organic growth is always going to be kind of an incredibly important priority for us. When you look at the 4 acquisitions we've made in the past, 2 of them, were not even revenue generating. 2 of them were technology acquisitions, and we bought them because they were really accretive to our stack. And then 2 of them, brought us, decent growth. So our M&A strategy is not just about growth. It's about the other things. It's about, again, technology, new products and services, and new geographies. And if you look at the 4 acquisitions we've made so far, they were all out of our proprietary deal flow. So in each of these 4 situations, the companies were not even for sale. And we, built a relationship with the sellers, and we convinced them that we were the good, the right partners. And I think we acquired them for very fair prices on both sides. All of this to say is that, we're going to continue, trying to do more of the same, being very disciplined on price, and not necessarily, being in auctions that favor the sellers. And that's going to be really important for us going forward. So growth is going to come, a lot from organic. If we find the right opportunities at the right price, of course, we're going to look at them.
And Essam?
Yeah, I mean, as you've seen, we've grown really quickly through M&A, very strategic acquisitions. Again, as Cherif was mentioning, they were not for sale. We targeted them as puzzle pieces that we needed, and we got them. And on top of that, we bought them. They were all profitable as well already, but they were already growing very rapidly on their own. So you even mentioned, like we mentioned, the news release we had last month. On a few of the acquisitions we made and closed in January. Just since January, we had, I think, over $5 million in new sales in the enterprise side, just from those acquisitions. And so we're seeing rapid growth. Even the announcement today, I think our top line now run rate is over 122 million. We're profitable, and the organic growth that company was seeing on its own was, I think, north of 36, without any cross-selling synergies and everything else that we can provide now together. So we're quite excited. We're seeing organic growth across all our divisions as well.
Okay, so now I'll still sit on industry data collection. I used to follow QHR back in the day, and the idea of monetizing the data that they could get their hands on was always something that they wanted to eventually do. Obviously, they never got to that stage, but where you guys sit today, how do you guys believe that data monetization is an opportunity? If so, how big of a revenue contributor do you think it could be as part of your overall business? And what needs to happen for any hurdles, whether it's government, whether it's even from a privacy perspective, as far as sharing people's data in the healthcare space. So just your thoughts on that whole potential revenue stream. Hamid, we'll start with you.
Sure. Yeah, I think that the country's privacy laws are still a bit murky in terms of providing for a real opportunity to truly unlock that type of a revenue stream. And for that reason, we've been very conservative in how we've looked at that. We don't look at that as a potential today revenue stream or for the foreseeable future. I think there's also just a lot of consternation and hand-wringing on the part of administrators, physicians, and even patients about this type of data. And it's the only industry where anonymized data does not pass muster necessarily with the government in terms of whether or not it can be sold, to provide insights. And there's concerns about being able to reverse engineer and kind of get back to a person's identity that's anonymous in terms of what what health could have looked like for that. And so there are a bunch of issues. I think right now there are some folks who are monetizing data in small pockets. I don't see anything that's widespread and pervasive. So if it's not a big opportunity, it's not something that we're going to be targeting. Again, we have to see a lot of acceptance, culturally for something like that before it's something that I think we make a big priority as well.
Okay. And Cherif, your thoughts?
Yeah, in our case, we think that we can use data very effectively to improve outcomes, improve quality, reduce our costs, but we will never monetize data. We just don't think it's worth it from a reputational risk point of view. Even if it was done extremely well, following all the rules, there's too much risk of being misinterpreted or mischaracterized. And as Hamid said, like the cost benefit just doesn't make sense. So we've decided, black and white, we're never going to sell data no matter what happens.
Okay. And Essam, where do you sit on that?
Yeah, I mean, absolutely. Health data is a very sensitive subject, right? I mean, from the chart notes that were in, on the cover to now digital, it's always the main thing. Privacy, security is always at the forefront of everything we do. I see it as something that's going to happen at some point, and it has to have some benefit to the patient, to the person, and they have to have the ability to opt in because they're getting something out of it. I think eventually in time, you'll kind of see that, whether they want to participate into studies on a particular disease or medication that they're on, and they want to opt in and get some sort of reward for being part of that anonymous type of solution. That's a possibility in the future. For the employer market, I think showing the metrics back to the employer that that they're getting benefit from this health benefit versus that one in service and so on, and moving them over. I think eventually you might see that. But right now, I think it's too early. It's way too early, but it's also really important to build the framework now, and that's what we're doing. So you have to have a unified product and platform to have good data, rich data that is useful in different aspects later on. So when they always say garbage in, garbage out, it's really important to have kind of that foundation set now, basically, for the future. I don't know if Nick froze there.
On our own now.
We're on our own. What do you guys want to talk about?
I believe Nick actually had a disconnection here.
I'd like to just add something as well. I think Cherif made a good point, and something I want to highlight as well, that we absolutely believe using data internally to just help our business operate better makes a ton of sense, and we do that in a fully compliant way. And I also believe that eventually, as consumerization of healthcare occurs and EMRs give way to PMRs, that's when you really are going to have empowerment of data, because people then are going to confidently opt in and say, I want my data to be used to help society or to advance healthcare. And that's when predictive analytics, and that's when that stuff really starts to flow. It comes back to that solid foundation you spoke of, Essam.
Yeah, it's exciting. I mean, can you imagine the better results we'll get in real life when you see real life patients using certain medications and real demographics as well, not the very narrow demographics that are in the studies right now that don't translate into the community once it's released as a product. So, I mean, this is the exciting thing in the future for sure.
Absolutely.
Apologies for that. I obviously got dropped and reconnected, so apologies. So moving forward, just one more question on the industry side of things. You all obviously having virtual care physicians, the idea of a doctor could be located in one province or one part of the world and potentially offering care either in other provinces or in this case, even across into the US. Is that something that makes sense? Is that something you guys could look at or are looking at? Are borders an issue here? Is there an opportunity for you guys to maybe make margin if you're successful in doing that by using, depending on different cost structures in different provinces and different parts of North America. Hamid, thoughts?
Yeah, it's a really interesting question. We already do employ the use of cross-border physician support. For starting with Circle Medical, it's something that currently they have physicians that live outside of the United States. Circle Medical's our U.S.-based telehealth provider, and they've been growing really quickly. And I think to the extent that the practitioners have the ability to meet licensing requirements in different states, they can really be located anywhere. And so, and we have that situation happen in the Canadian business as well. And there's some surprisingly high percentage of Canadian doctors who have been in a U.S. med school and so may have licensing requirements currently or can get it very, very efficiently. And so we do see that as a potential interesting way of exacting some kind of arbitrage, positive arbitrage. But we also have to be very careful in doing that because we also want to, as a large provider, we don't want to take resources away from Canada and take it into other countries. But allowing physicians the ability to be in different jurisdictions to serve their home jurisdiction, I think, is really a pleasant thing. And we've also been intentional about wanting to have physicians all over the country. I mean, the acquisition that we announced today, even though we had a lot of Ontario doctors already on the platform, we're really thrilled that we get another group of physicians that are serving a large exec health business that are now going to be able to have another option to practice. So yeah, I think that's our view on it.
And Cherif, your thoughts?
Yeah, we've been really advocating for national licenses for telemedicine, and obviously the current system of provincial licenses doesn't really translate into 2021 telemedicine world. So that's something that we've been advocating for, and I think there is some receptiveness. It's not done, but I think the different regulators understand the logic and how it can help reduce some of the shortages in some provinces or some areas. So I'm pretty confident that will happen in the next few years. As Hamid said, we see a lot of physicians that are licensed in many provinces and can see patients across province lines, which is really exciting and great from a business model point of view. The US is a little bit more complex. Obviously, the CMPA and other regulators have been quite, non-receptive to that. I think the medical malpractice issues in the US just make it very risky for Canadian physicians to see patients there, and I think there's not a huge level of receptiveness there. But I think Hamid's point about folks who went to U.S. medical schools is a really valid one. But for us, it's not a huge part of our business. Some of our enterprise clients who need U.S. coverage because of traveling employees, etc., which obviously didn't happen in the last 12 months, but from before that, we have a partnership in the U.S. with a leading telemedicine provider called Doctor on Demand, where we have a bit of a kind of a roaming agreement where when our clients are down in the US, they can use their services, and then they get full coverage in Canada and the US, including prescriptions and everything that goes with it. So that's how we've worked around that issue.
Okay, your thought?
Yeah, I agree with Cherif that eventually you will see national licensing. It takes some time, but it will happen. The complication is, again, that you got to be really separating the virtual episodic care from the true continuity of care and kind of that holistic view of patients that we always talk about. So will there be the ability for patients to be seen from doctors from other provinces for virtual episodic care? Possibly, but the future of kind of where this is going, what gets me excited is that doctor hopefully would be part of a bigger network with actually a footprint on the ground as well for that full ecosystem we always talk about. Because again, if you're just going after the virtual episodic care part of the market in public health, it's not very rewarding as a company financially, right? You're talking about trying to treat the patient as a whole, the chronic disease, the complex care. And to do that, you have to justify it with that combination of that ecosystem, like I said, virtual and on the ground. So what's exciting is time shifting as well, right? So you talk about the cost differences or the revenue differences, but even the time shifting aspect of it is going to be tremendous, providing longer hours, not only 8 to 8, but 24/7, basically right across the country, and giving access. And if they need to be seen in person, great, there you are. You can see one of our affiliated clinics or one of our clinics, or if they need medication, you can get it delivered to even remote areas and so on. So it's extremely exciting times basically for that if it's done properly.
Okay, so shifting the topic to competition, obviously recently Amazon indicated they're going to get into the telehealth space with their Amazon Care, targeting their employees and the B2B market in the US, is my understanding. Obviously, there's no insurers involved. And then there's Teladoc in the space. There's Walmart, as you guys know. So what are your respective thoughts when it comes to Amazon's entry, and how does that potentially change your perspectives when it comes to the US market in general, and even here in Canada, potentially if these guys were to think about coming north of the border? So it's a little bit of a short-term, long-term thought process there. And we'll start with Hamed.
Yeah, no, I think obviously it's anytime Amazon decides to go into a new area, it's always of extreme interest. Listen, we think it's great. I mean, Amazon has been shown to access markets that they think are healthy, are expanding, are exciting. There's always this kind of view that it's doom and gloom, but to consider the fact that in the US alone, telehealth is likely a $300 billion market. And so there's lots of room for lots of different players. And it's what's been shown to happen actually when Amazon enters a market is that it doesn't actually destroy everybody. And there ends up being healthy competition and very, very strong continued performance by a lot of the incumbents until you get into a bloody red ocean. But we haven't really seen that happen, and we don't expect that to be the case here. And in our case, we're obviously in a size of market in the United States, we have a great asset, but it's at a low 8-figure revenue run rate, $10 million plus per year. It's growing very, very fast. We're a market share builder and generator and taker right now, and we feel really great about our high NPS scores, our rate of growth, and the opportunity to continue to grow for a long time. So I'm not even sure Teladoc would be that worried given their continued growth, but I think if you're obviously a large market share leader right now, you would be a bit more worried. But again, I think it's just such an expanding market that I'm not sure anyone's really worried about it at all.
Okay, Cherif, what are your thoughts?
Yeah, we're agreeing on everything today, guys. It's awesome. Look, I mean, on that topic, look, I mean, if it was a smaller market or a small market, of course it would be an issue. But healthcare, is one of the largest industries in most markets, including the US. And I think we can draw parallels from other industries. Amazon is in analytics. It hasn't prevented Snowflake from being the best IPO in history. Their AWS hasn't prevented Azure from building a multi-billion-dollar company, hasn't prevented Shopify from being the most valuable company in Canada. Like there's a lot of parallels from other industries that are not even as big and interesting as healthcare. So of course, Amazon is a very formidable competitor. Of course, we respect them. Of course, it's a great company. But I think there's just so much greenfield for all of us to go after that we can all build very big, sustainable, successful companies without bumping into each other.
And Essam?
Again, we all agree. I think the key thing for them and Amazon is I think they're focusing on the US right now. I think Teladoc initially took a hit based on that announcement. I mean, it was the most obvious thing coming. They've been talking about Amazon Care for a very long time, and they bought Health Navigator, they bought Pocket Pills, they launched Amazon Pharmacy, and then they launched Amazon Care in Seattle. So it's a well-known thing that it was coming. They're about reducing healthcare costs, right? And that translates more into the U.S. market than the Canadian market. I don't see them as an incredible threat in the public Canadian market. Could they come up and try to do what Teladoc did up here in the enterprise side? Possibly, but again, I don't see them coming and starting something organically from scratch either. Like I think they will grow through acquisitions personally, but that's my theory on them.
Okay, so now just moving the conversation to what I call the service delivery. And here I'm assuming you guys probably might differ a little bit. When I look at the three of you guys, we've got Well and CloudMD. You guys have an omni-channel model. You're obviously more acquisitive at this stage in your evolutions. Position game a little bit more focused in your evolution, and you guys are more of an employer pay model. So what do you say to investors to assure them that your model is probably the best approach relative to what else is out there in the marketplace? Ahmed?
Yeah, I mean, I think we really believe in omni-channel. To us, this is a very important conceptual, point of care quality issue. Our view is that if a patient is on a virtual care platform talking to a doctor, and the physician feels that there needs to be a closer examination, that there should be an opportunity for continuity of care and a team-based approach where that physician is able to really take care of that patient and be able to write a note and basically safely hand over that patient to either him or herself or another physician that's able to take meeting notes and consultation notes and really action them. To us, as we look at care models around the world, of companies that are executing on this in a really high quality way, to us that is a really aspirational way of being able to deliver every single experience, and that's something that we're working towards. And one of the reasons why we're building clinical footprints like today in Ontario. In addition to digital footprints and wanting to kind of stitch those together in a really quality way with primary, secondary, and other types of care and resources. So, and we also think that's good for business. We think that ultimately, patients are going to, vote with their feet, so to speak, and work with care providers that are able to provide that continuity of care and really take care of them and help them build that relationship. And of course, if you're having to give up your patients to someone else when they go to a clinical footprint, now that clinical footprint has got the ability to provide telehealth as well, and so there's a potential to also lose that patient. I mean, that may be more relevant in the government funded models than the employer-based models, but it's just something to consider as well.
Okay, and Cherif, obviously you're a little bit on the other side of the spectrum. Your thoughts?
Yeah, it's important to understand that we're not selling doctor visits at Dialogue, right? We are selling a holistic and integrated health platform for employers to keep their employees healthy. And it is absolutely true that not everything can be done online. And in those cases, we navigate patients, around in the healthcare system, and we have this white glove concierge service that is extremely well appreciated both by our members and our paying customers. So I think if we were if we were selling doctor visits and we were online only, I think we would be at a major disadvantage. But that's not our business model. We're really selling this whole holistic platform that does include a doctor visit in some cases, but also includes care coordination and navigation and nurses and mental health and EAP and career counselors and all of the other things. And in the future, ICBT and chronic disease management and everything that we want to build. And we get paid a monthly fee. So for us, there's no concept of losing a patient to somebody else or getting stolen or whatever it is. It's just not our business model. So that's why we're a little bit different, because we're not selling consults. And I think if we were, then we would need to be omni-channel. But since we're not, our model holds up really well.
Okay. And Essam, your thoughts?
Yeah, I mean, I think we have the best of both worlds, really, in the sense that, the old way of delivering healthcare in a fractured system, I would hesitate to try to reproduce that digitally as well in the future. And so what we look at is that ecosystem we always talk about, and the ability to provide the full omni-channel services that Hamid's referring to, but also not ignoring that same patient is also an employee. And I think with our acquisition this morning, we are now, I think, employer pay, about 40% of our revenue. So that top line revenue we talked about and growing is about 40%. And the great thing about it is, we can access now over 5,000 lives. Those patients are not just employees. When they hang up their work clothes, they're patients at home. We can offer them other solutions. And I think that's really important when you start talking about healthcare navigation, which is the real key thing here. The future of healthcare for better outcomes needs a healthcare navigator. Eventually it'll be more automated for sure, and that's what we're building. But something where patients don't have to self-triage, because that's where the mistakes happen, where they end up falling through the cracks, or they're with the wrong provider or the wrong specialist or the wrong vendor, and you don't have the ability to work as a team. And so that ecosystem that we keep talking about, I know we keep saying the same thing over and over again, but it's a reason. That's the future of healthcare delivery, really. And we're really excited about that. So we do get revenue on both sides of it.
Okay, so we're coming on to the last 5 minutes. So I'll try to get one more question each, just to shake it up a bit. The question here is, what role do you see wearables playing in how digital healthcare is delivered long-term in your respective market? I just want to get Hamid's perspective on that one.
Listen, I think all forms of data retrieval to help build the portfolio of data sets is helpful. I mean, we're seeing an explosion of chronic disease care management platforms that are designed to pull data in, combine that with practitioner and advisor support to help establish plans that take people back to health. When you step back, 20 to 30% of all healthcare costs are attributable to chronic disease. And a lot of people would tell you a lot of chronic disease is behaviorally driven, which is incredible when you think about the trillions of dollars that likely could disappear if people just behave better. So part of the problem is people don't really know how to behave. It's not always about bad behavior. They just don't know how to behave. And so when people start to get better information, coaching and nudging, then I think that they will start to take those steps. And I think part of that could be the fact that data can help support their wellness in terms of bringing back information that they can track and I back to the PMR, the personal medical records. I really believe that this is going to be part of the whole trend of consumerization of healthcare and precision health, where we're gonna have more and more data, more and more information available to patients, and we're going to be putting the power back into the patient's hands. And that's a really exciting trend, and frankly the only way healthcare costs can be under control in the future anyway.
Okay, and then a separate question is, obviously we've got episodic care, chronic care, pharmaceutical, optometrist services, mental health, employee assistance programs, student programs. So for Cherif and then for Essam, what other services do you guys think that the marketplace could benefit from down the road that potentially you would add as part of your offering?
Yeah, so We are a B2B focused company, so our paying customers, employers, insurance companies, etc. So we look at what are their needs and where are their cost centers and what are they trying to solve to inform our roadmap. So we have regular conversations with these personas and trying to understand exactly what are the unmet needs. And I think a lot of the things that you enumerated in the questions are kind of things that are on our roadmap. And you'll see announcements from us pretty soon. But again, we're trying to solve the issue of the employer, and we're going to be developing products and services to solve these needs.
Okay, and Essam?
Yeah, again, we always talk about the idea of a kind of a one-stop shop, the ability for that patient to get everything they need in healthcare, no matter where they are in that stage. I mean, obviously, mental health was the very at the forefront initially, and obviously that's still, and it's expanded now with the pandemic. That's also integrated into the physical health, and but I think what I always tell people is just think about you as a patient and everything you service or you need services for. From the primary care to the specialist to the psychologist to the physiotherapist to even when you start talking about medications and talking to the pharmacist and getting prescriptions delivered and so on. We've added vision care as well with our Vision Pros asset as well, and online exams that you can do with it. I think in the future it's going to be the ability to provide a unified solution to that patient. And you talk about wearables, and wearables will come into play in terms of providing some of that data and connecting you to the right providers eventually as well.
Okay, I think that's all the time we've got for today. So first, I'll thank you guys for joining. Hamed, Essam, Cherif. Wish you guys all the best going forward. And just a reminder to everyone on the line that we've got the table coming on at 1:40. Thanks, guys.
Thank you very much.
Thank you.
Everybody.